Do you believe the market correction is behind us?
I'm going to qualify my answer and say I don't think so, but let's examine what we see so far. We had what in hindsight appears to feel and smell like what we call a blow-off top in the month of January, where we had an outrageous gain, 7.5% or so, depending on your index, in the first month of the year. In hindsight, that proved clearly unsustainable, but it definitely had a frenzied buying to it. That unwound itself in a hurry and in a nasty way for many people in early February. And we spent February really trying to dig ourselves out of the hole, and a good portion of March and early April, though early April had its own back and forth to it. But it's a little premature sometimes to just say, okay, well, we've stopped going down, so we won't go down again. I look at things like moving averages and the longer term picture, and I feel that until or unless the broader indices can really break some of these moving averages that have started to point downward, for example, S&P and SPX and NDX, have really sort of been caught between their 200-day moving average, which has provided support throughout some of these declines, and the 50-day average, which has now turned lower, but has been providing some resistance on the way up. Until you get a convincing break one way or the other, we tend to meander. That would mean the strategy would be, right now, you can buy dips if you like, but you also should be considering selling rallies. And I think prudent risk management is called for in any circumstance. I think I'd feel a bit more comfortable about saying we're out of the woods if we were having this conversation in late May. I still do believe that there's some truth to the sell in May and go away adage. It doesn't work every year by any means. But in years where we've had sort of the climaxes of bull markets, and I think specifically of 2000 and 2007, the last gasp in many cases was in May of those years, 2000 and 2007, where you had a bit of a sell-off and then a bit of a rally, and then the summer kind of got a little ugly. I certainly don't want to be sounding the alarm on something like that. That would be alarmist and irresponsible to do, but realize that has happened and there is a historical precedent for that. So rather than just sort of sounding the all clear, which seems okay, at least in the short term, we're far from being able to sound the all clear going forward. Why? First of all, I think the market is getting a lot more volatility from political factors than it had before. Market more or less ignored political factors throughout 2017, largely because it could focus on whatever the noise was. We'll focus on the tax reform. Well, that's behind us now. We have it. What's next that's good that's going to come out of Washington? Maybe some more regulatory relief, depending on your industry. But for the most part, you're not going to get any big market-moving legislation, and you're getting an increasing amount of noise just regarding extraneous stuff. But that extraneous stuff, and by that I mean, a lot of the investigations that are going on into and around the president, they erode psychology over time. So the more you hear it, the more it kind of weighs on the market. You are, I'm going to argue, fighting the Fed to some degree, because the Fed has told you that they've been in the process of raising rates, and they've told you they're going to continue to raise rates. And you also have the paradox that if the economy comes on too strong, the Fed's more likely to raise rates, or you're going to get some inflation, neither of which is all that great for the market in the short term. So there are plenty of risk factors that are not behind us. And while we may be in a constructive backdrop, while the market may be responding in a good way, at least to the onset of earnings season, there's a lot that we have to go through. And I would say that until or unless we really get the moving averages trending higher, or unless we really put the 200-day moving average support in our rearview mirror, it may be premature to just sound the all clear.